Well, expenses are the costs that a business incurs in order to generate revenue. So as a contractor, there will be some expenses that you incur. These generally can be broken down into two categories. The first one is travelling expenses, and these will be the expenses that you incur in getting to the client site on a daily basis. You can claim those within certain limits, which I'll come on to later. The second category is broadly administration expenses. So these are the expenses that you incur in order to deal with the day-to-day administration of the company. Common sense has to play a part here. The rules are very broad really, and if you're incurring an expense in running your business, usually you can claim it. You can't claim an expense as a personal expense, but business expenses you can claim. But I think you have to be careful. You've got to be commercial about this. There's no point in incurring an expense just because you get tax relief on it. So you should be sitting back and looking at what you actually need to run the business efficiently. So the kind of things that you're going to have are things like a computer and related peripherals and consumables, stationery, maybe some postage, travelling expenses, the services of an accountant, maybe course fees. You can be forever spending your time filling up a spreadsheet recording tiny little expenses that save you a very small amount of corporation tax. I think a sensible approach is to focus on the material items and try and get your tax planning 99% right and not spend too much time worrying over small expenses that you may have incurred that you've simply forgotten about. Cars are always a question that people ask me about, and a lot of people see in big companies that executives are provided with cars, and a typical question is, can my company buy my car from me or buy me a new car? The strict answer is yes, it can. But I like to talk about tax planning. A better form of tax planning would be to stand on a street corner handing out £5 notes to passers-by. It's not a good idea to have a company car. But of course, many contractors work remotely and they travel to remote sites. There's no public transport available and they use their car. Many use their car because it's simply more convenient to do so. If you use your own car, you're entitled to claim a mileage allowance. The present rate of that mileage allowance is 45 pence a mile for up to 10,000 miles in a tax year, dropping to 25 pence a mile thereafter. It may seem at first a little odd that a contractor can claim as a tax-deductible expense his costs incurred in getting to work every day, because it's well established that ordinary employees pay for their own commuting costs and cannot claim any tax relief on it. Contractors and other site-based workers could claim the costs of their travelling to and from their workplace while it remained a temporary workplace. Broadly speaking, a temporary workplace is a place where you do not expect to spend more than 24 months. Mobile phones are increasingly used by contractors these days, and it's perfectly in order for a company to provide an employee with a mobile phone. What you have to remember here is that for the company to claim this as an expense, it has to be the company that has the contract with the mobile phone provider. So I can see that you have a mobile phone now. That's obviously your own mobile phone. It's probably on a contract with one of the big providers. The company, I'm afraid, cannot pay the costs of that contract. You can, if you want, get an itemised bill and go through with a yellow highlight pen identifying the business calls, and the company could reimburse those plus VAT, but I have to say that's probably not worth it. Probably the best thing to do is to wait till towards the end of your contract and speak to the provider and see if they're prepared to switch that contract to your limited company. Your broadband is your personal expense, and the same rules apply to that as they do to mobile phones. But if you go along to your broadband provider and say, can I have business broadband? They'll probably agree to it, and if you do that, the company can pay for the broadband, the company will get tax relief. The flip side of that is you'll probably find that you're paying about 50% more than you as an individual are, so you shot yourself in the foot. So while you can't claim your broadband costs, and indeed many of the other costs that you incur at home, such as additional electricity charges when you're working late at night, the government have recognised that employees who do some work from home do incur additional expenses, and by concession they'll allow your employer, so this is your own limited company, to pay you up to £4 a week for the additional expenses that you incur while you're working from home. The company can pay into a pension. We find many contractors who come to see us already have a personal pension established, but equally many have been in a company scheme before. A few lucky ones have been in final salary schemes. And I think it's important not to let your contribution record slip for too long. So your newly formed limited company can pay into a pension scheme. The rules are very flexible. From 6th of April 2014, the maximum amount that can be paid every year is £40,000. And there is also provision to bring forward unutilised relief. So contributions are very flexible. They're also tax deductible expenses for the company. Many contractors find they travel overseas. Some of these are travelling for a short duration at the request of their client. Maybe they're going to Paris for a week. Others actually secure a contract elsewhere and might be located in another country for perhaps 6 months. I think if you're going to be in any particular country for longer than 6 months, it's important to take accountancy advice in that country, because you may find that you have tax to pay in that country. But for the majority who are only going to be located in a country for a relatively short period, there is an alternative system for claiming expenses. Now you're going to find for instance, if you're in Paris for a week, you're going to be incurring expenses. There's the hotel, there are meals, there's local travelling. What the government have done is they've published a list of benchmark rates, and these are rates that they pay to Foreign Office workers when they're travelling abroad. And instead of claiming the actual expenses that you're incurring, you can claim these expenses. So we have fixed rates for a night in a hotel, we have fixed rates for subsistence and fixed rates for local travelling. And you're entitled to claim these expenses instead of the actual expenses you're incurring. Some of these rates can be quite generous. You might find that you're staying in a 3-star hotel in Paris, incurring a cost of maybe about €100 a night, and you may find that the benchmark rate is closer to €200 a night. In those circumstances, you can pay the lower rate and claim the higher rate. It's important to add also that if you're working away from home and staying overnight, you're entitled to claim an incidental overnight expense allowance. Within the UK, this is £5 a night. Outside the UK, it's £10 a night. We often find that contractors tend to build up large cash balances over a period of many years. So as an alternative to holding cash, the company can make investments. And broadly speaking, it can make similar investments to those that you can make. So it can buy shares, it can buy packaged investments, it can buy bonds. The kind of things that it can't buy are tax efficient investments such as ISAs, but it can broadly buy investments as a company just as you can as an individual. I think what's important to recognise is that what you're doing is swapping one asset for another. You're swapping the asset of cash for the asset of an investment. The purchase of an investment is not an expense. People often talk to me about writing expenses off against tax. I think it's important to explain this in a little more detail to avoid any misunderstanding. If, for example, you incur a business expense of £100, that does not mean that your corporation tax liability is reduced by £100. It means instead that the profit subject to corporation tax is reduced by £100. And if the corporation tax rate is 20%, it means the tax saving as a result of incurring that expense is £80. Please don't be under any misunderstanding. You are still £80 down for incurring the expense.